Hi friends, good evening. Today I have two stocks which are part of the defense small cap sector in India. One of them is Goodluck India Ltd and the second one is NIBE Limited. Both the stocks are doing well with regards to India's defense sector and the modernization driven by the Bharat Nirbhar Reliance initiative set up by the Indian government. While large corporations dominate, small cap companies are making vital contributions to specialized components, electronics, surveillance equipment, and engineering solutions. We'll go through the details one by one. Production capacity 150,000 shells, investment 216 crores, funding mix of debt and equity, trial production target Q1 FY26. So it's a new company. I think it's just started its operations, market cap of 2,365 crores. Then the product portfolio is defense grade equipment, aerospace components, forged components, engineering components, socket welding and slip-on flanges. Then programs supplied: Pralay missiles, BrahMos missiles, Pinaka rockets, indigenous rocket launches, HAL-HTFE engine program, K9 Vajra howitzers, Talwar class frigates. Then the second one company is NIBE Limited, integrated manufacturing of critical defense components, focus on precision weapons, surveillance and communication equipment, protective vehicles, defense systems and subsystems. Features: okay. Recent developments: launched India's first 16-meter WEMC machine. Features: Siemens 840D control capabilities, manufacturing large complex components including missile launchers, subframes, launching platforms for defense, space and aerospace sector. The views and investment tips expressed by investment expert broking houses, rating agencies on the internet are based off their own and do not represent any personal opinion. Investing in equity stock poses a risk of financial loss. Investors must exercise due caution while investing or trading in stocks. Author of this article is not liable for any loss as caused as a result of the decision based on this article. Please consult your investment advisor before investing. So this is the price of Goodluck India, 715 rupees, down 4% yesterday, then down 9% in the last 5 days. Overall minus 3% in the last 1 month, 23% negative return in the last 6 months, and then 21% negative return in the last 1 year. We move on. This is the logo of the company. Moving on, ownership strength is slightly missing the benchmark. Stock is at a premium valuation. Company can improve the employment of its assets used. Company possesses stable growth history and manageable debt. Price to book value of 2, face value 2, book value 358, price to earnings ratio of 15, promoter holding 56%, earnings per share 47 rupees in the last 12 months, sales growth 15%, return on capital 16%, profit growth 50%, which seems to be good. Promoters 56%, public holding of 40%. This is again a highly volatile stock based on the high public holding, high volatility in price, high volatility in the volume of the stock. Promoter holding decreased by 6% in the last 5 years and 33% profit growth in the last 5 years, which is a good positive for the company. These are the different companies, peer companies that we can compare. Goodluck India Limited in the defense sector too. Then you can see sales have been more or less consistent, a little growth in the September quarter. However, you can see the net profit has grown in the last quarter again. Did not keep up to his expectations, a little drop in the net profit overall. You can see overall year on year profit has been increasing, revenue has also been growing, so which is a good positive sentiment for this company and the stock price. Then 10% sales growth in the last 1 year, 30% profit growth in the last 1 year. Stock price minus 20% in the last 1 year, return on equity of 15%. Reserves gradually increased or doubled in the last 2 years, which is good. Borrowings slightly increased. Then we look at the second company, which is Vibe, again down 5% yesterday, 8.6% down in the last 5 days, down about 21% in the last one. Positive of 21% in the last 1 month, which is a very good sign. Negative return of 17% in the last 6 months, and about 17% negative return in the whole year. So something that the company can look into. This is the logo of the company. You can see the symbol of India, something similar to the emblem of India in the logo there. Then ownership strength is missing the benchmark. Stock is available at a premium valuation. Inefficient use of its assets, so something that the company could look into. Company has a good growth history and manageable debt. Face value 10 rupees. Price to earnings 58, which is quite high. Price to book value of 8.6, again a little bit on the higher side. Cash of 11.5 crores, debt of 61 crores, earnings per share 22.50, promoter holding 53%, sales growth 165%, profit growth 382%, which is amazing, return on equity 20%, which is good. Again, public holding is 37%. Again, could be the reason why the stock would be highly volatile in both price and volume, to be found in the oversold and the oversold sector. Yeah, so it will remain oversold. Incorporated in 2005, is the business of manufacturing critical components for defense, e-vehicles and software development. Then stock is trading at 8.5 times book value. Promoter holding decreased by 10% in the last 3 years. Working capital requirements have reduced by 20 days, which is amazing. 65 days currently. Debtor days have also improved from 89 to 54 days, which is again very good. Compared to the other peers, you can see the stock P of some companies is really very high. Some of them slightly below the NIB Limited company, which is a good sign again. Sales have been growing consistently. However, the last quarter the profit has taken a dip. Overall, company seems to be able to grow in revenue. Operating profit margin has reduced, possibly due to competitive business order. Operating profit has improved year on year, which is a very good sign for the company. Then sales growth of 184%, profit growth of 203%, which is amazing. Figures in the last 1 year. Then minus 12% stock price in the last 1 year. Return on equity is 14% again, which is very good. Reserves have increased in the last 2 years, which is a good sign. Borrowings have also increased, something that the company would need to look into. Then, good evening, friends. Yeah, that's about it, friends. Thanks for watching the video today. Please share this with your friends, family, and associates, those who would benefit from this video. Thank you for watching. Have a lovely week and weekend as well, which is coming up tomorrow. Thank you.